All right, hello, welcome back to the show. Hope you're having a wonderful day today. Before I start this, I like to stress to you all that I am a novice. I'm new to trading. I've been doing it since March. I'm new to technical analysis. I want to stress that. Uh, Learning my technical analysis and charting. So as you all know, I normally do the euro dollar, and I'm in a trade. I'm trading a mini lot, up to 74, 75, 73, 74 pips. So as you all know, the mini lot is $1 per pip. So I'm up 74 pips. Um, how did I come to this? Well, I'm glad you asked. I been looking at the euro and conversely the dollar. And if I zoom out a little bit, so walk through this, I saw the dollar in this broadening formation right here. It was making lower lows. Obviously, it came from it. Just say it dumped all the way down here. It made lower lows, lower high. Didn't make a lower low here, but it did make a lower high. Lower lows, lower high, lower lows. Then suddenly higher high. And this higher high is goes with this right here. Um, Actually, no. This lower low is the reverse. Lower low right here. And I saw that and I said, okay, maybe a trend reversal is on the horizon. When it made the higher high, it failed to make a lower low relative to this previous major swing low. And after it made that lower high, it established the bottom with this higher low, this higher low. Not necessarily a higher low, but this not necessarily was a higher low, but it still established a bottom in this area. And confluence, and this is just a 4 hour, the confluence was with this establishment of this bottom right here. We had waning negative momentum on the MACD, and we were in oversold territory, churning up on the stochastic. And that's just on the 4 hour. On the daily is, to me, is in between. So the 4 hour, the weekly, and the monthly. I was going to say monthly, and a monthly. Yeah, I need to get rid of this. Are in agreement. They're in agreement. The 4 hour, weekly, and monthly are in agreement. The daily is in between. It's confusing to me. It's not confusing, but it's not in agreement with the 4 hour, weekly, and the monthly. On a monthly, the dollar has been trending up since 2011. It's a series of lower highs. It hit this bottom of this upward on a monthly parallel channel, started trending up. So on a multiple time frame analysis, we're good. So what I'm doing is like a measured move. This right here, let me spread it out. This one right here is just a move from this little structure right here, the bottom to the top of this major structure. Target price, what's the word I'm looking for here? Profit taking level. And this major one right here is basically the 100% of the structure from right here to right here. If I zoom out a little bit more, I know I'm talking about the Dixie, but you can really, everything I'm saying on the Dixie, you can apply to the euro. I did my Fibonacci from the major swing high to the major swing low, and the measure move of the structure from the breakout leads us directly to the 618 retracement level on the money. It's like, wow. if I look left for a major historical support resistance, I would need to go to the daily to see more. Actually, allow me to have this Fibonacci retracement, or the Fibonacci 2 on the 4-hour, visible on the 5-hour also. I mean on the daily also. So the first historical support resistance that we'll see, expecting us to see, is this right here, which is around the 50% retracement area. That if we don't have any, major resistance there, then the next major resistance level is right there. I'll see that one, which is around the 618 retracement. Let's go back to the 4-hour, as you all see. So on the retracements on upward, we'll say 382, this major support resistance, which is the first one I pointed out, 50%, 618, and this major support resistance up here, which look left again, it's about right here. And you can see right here. After that, I think it's right here, right there. So those are other levels that we can see. Now we go back to the euro dollar. So let me that's it right there. Wow, it's amazing, man, amazing. So what? So these measured moves right here are, this long one right here is from this major high to this major low. It retraced 62% of the time. As you know, I'm looking at that as A. This is A, this is B, and then C. I'm looking at that. And let's see here. This is a few things I'm looking at here. And also, this one right here is a 100% measurement of the structure, the width of the structure. Yeah, that's it. So this green horizontal ray is tantamount to Dixie, where you're going to see, look left, historical support resistance. Now also I'm looking, you can treat this as a head and shoulders pattern, where this is the left shoulder, head, somewhat of a right shoulder, and the neckline is right just above this red price line, which just broken. So if I were to, yeah, so this golden line right here is the neckline. Go to the head and shoulders pattern. We'll do right there. Left shoulder, head, right shoulder. So you can look at it such as that. Let's see if it better visibility on the daily. Actually, let me fix this. I guess you can. Better visibility on the daily. I'm going to erase that because a lot of things are shown on the chart. So right now, as you know, price falls faster, as my mentor told me. Shout out to Dollar Will. Price fall faster than they rise. And when I started the recording, I was at 74 pips. Now, 10 pips later, 84 pips. It's in the 8 to noon, 4-hour time frame. As you all know, wow. As you all know, the most pips I got was 100 pips, and that was more recently from this decline right there. 100 pips. I was happy about that. Now, let's see if we can break that. What I plan on doing is moving my stop loss down to the previous high. So let's say I got in perfectly right here. As you all know, I said previously I started moving my stop loss prematurely. So it just clicked all of a sudden a couple of days ago. Last week actually just clicked. I said, instead of moving my stop loss prematurely, once it make I see a trend, a reversal in the trend, once it make a lower high, I'll just move my stop loss to the lower high and let it just keep going and make another lower high. I'll move my stop loss down to the lower high and another one and another one. So my stop loss would be right here if I would have had that mind frame up here. I'm going to keep my stop loss right here because it's going to retrace. I think it's going to retrace and either test this line, this trend line right here, or this neckline, because we're going to oversold territory on the stochastic. So once it make a new lower high, I'll just move my stop loss to the lower high, hopefully locking in, thereby locking in some profit. So I don't want to keep you all too long. Like I said, this is my journey of technical analysis, and I actually did this. I did well on the oil. I'm not trading oil. I want to, did well on the oil. So I saw that, this is USO oil. I put a trade in, boom, right there, as if I was putting a real trade in, and I'm in the green. I'm in the green, and I like it. I like it. I appreciate you all. Don't forget to like, comment, subscribe. Hit the notification bell so when I release new videos. I want to re-implement my pivot points. I used to trade pivot points when I had my tried day trading, but I said, nah, let me go into swing trading. So I want to reintroduce pivot points as a strategic entry and possibly exit point. No, strategic entry point. I'll say that. So with that said, as always, thank you all for tuning out. Hope you enjoyed the show. I'll catch you guys on the next one. All right now. Peace.